next panel discussion is one that I'm really excited to have the privilege of moderating. This next one is from open banking to open data, the evolving landscape. And we're going to compare different markets, regulations driven versus market driven, and the current status of the market with reflections of pros and cons of that approach. So I'm going to ask three speakers to join us, starting with Mr. Novianto, the Deputy Director of Payment Systems Policy Department, Bank of Indonesia. Mr. Novianto, would you like to lead with your opening thoughts?
Okay, thank you, Jamie. Good morning, good afternoon, good evening to everybody, wherever you are. Thank you for the opportunity. It's truly an honor to be sharing the experience and approach of Indonesia. Let me start by saying that we were very much driven by technological advancement, the innovation, and the various products and services, especially in the financial sector. We see some rapid changes and rapid innovation in most areas. In the payment system area, we recognize at least three main areas: the payment instrument, the payment channel, and also the infrastructure. Nevertheless, we see that there are still several challenges that occur in the payment system industry. Among others are high fragmentation in the ecosystem. There's also high gap in the capabilities between players, of which all of these result in so many efficiencies in place in the payment system industry. As a response to that, in 2019, Bank Indonesia issued the Payment System Blueprint 2025. The blueprint was intended as a navigation tool and a guideline for the direction of the payment system development in Indonesia. There are 5 main initiatives under the blueprint. The first initiative specifically dealt with open API standard, and the other initiatives deals with other areas within the payment system, not only the infrastructure, but also the regulatory reform and data optimization. Then as a deliverables of the first initiative, in August 2021, we've managed to introduce the national standard for payment open API, or we call it SNAP. SNAP. The standard was a product of collaborative efforts between BI as a regulator and industry representative. There were representatives from banks, representatives from payment fintechs, e-commerce, and also industry association. So this is a collaborative efforts that we can create the standard. There are 3 subject area that we standardize. The first one is the technical and security standard. The second one is the data standard, and the third one is the governance standard. There are at least 22 services that we standardize, and under those 22, we also define 81 sub-services under 5 service category. The first category is the registration API. The second one is balance inquiry. The third one is the transaction history. The fourth one is the credit transfer, and lastly, debit transfers. So we've covered all the potential services of the payment API that can be standardized. Hopefully, this open opportunity for a new business model that can use this API, not only for payment purposes, but also for other purposes. For example, you can use the API balance inquiry for other services, for, let's say, account aggregator. You can also use the API transaction history for creating the credit scoring, and so many opportunities for new innovation basing on the standardized API. We also believe that by doing the implementation of the standard, this could be one of the solution for our cases in Indonesia, where we have so many fragmentation in place. There are hundreds of banks, there are hundreds of fintechs, and new still coming in. So the fragmentation is very high. So we believe that the standardization is one of the key where we can solve integration of the domestic. At least the first step will be integration of the domestic Indonesia digital economy ecosystem. because there will be no integration without interoperability and interconnectivity, and there will be no interconnectivity and interoperability without standardization. So that's what we believe. By doing also the implementation of standard, we can believe that we were promoting the interlinkage between bank and fintechs in a uh, more manageable risk manner. We can also drive more innovation and more efficiency by implementing the standard. Nevertheless, we believe that there's high gap in the capabilities within the industry when they have to implement the standard. So that's why, as you can see from the slide, we set up for a milestone for the implementation of the standard. It begins with the first milestone in June 2022, and the last milestone will be June 2025. So there are 3 years of implementing of the standard.
Mr. Noviento, I'm sorry to interrupt.
Okay.
But I'm going to have to cut you off there. We'll come back to our answering questions in a second. Thank you very much for that amazing presentation. So we'll be back with you in a second. But can I ask our second speaker in this panel, Mr. Ken Chua, Deputy Director of FinTech Infrastructure Office, the Monetary Authority of Singapore, to please share his initial presentation for 5 minutes.
Yeah, thanks for having me here. I'm Ken from the Monetary Authority of Singapore, and today I'll provide a very brief sharing on what we have done in the space of open finance in Singapore. Right? So this slide is really to frame the big picture around the enablers for innovation, and this can be applied to open finance, which is the focus for today's sharing and discussion. So for example, the need for the relevant digital infrastructures, how we should collaborate with the broader ecosystem on experimentations and also to drive digital adoption, as well as to constantly looking into our regulations and see whether these regulations remain conducive to support the innovation, right? So specifically, if we were to examine the digital infrastructure pillar in the context of open finance, there are a few key pieces which are fundamental to enabling and driving the open finance agenda. I've listed 4 here. Right, first about identity. How do we authenticate the person? And this applies to individuals as well as the individuals behind a business. Second, APIs, which is fundamental to enabling connectivity as well as data exchanges. Third, data. We talk about data protection, user consent, and how we can move from open finance to eventually open data. And finally, on the payment piece, because this is the most common use case in open finance, and I'll have one example of this as well. So the next few slides is really just to provide a very high level kind of our journey into the open API or open finance journey, right? From co-creating the finance as a service API playbook with the banking industry to collaborating on industry-wide projects with financial institutions as well as the relevant government agencies. I'll share more details on the subsequent slides for each of these projects. The first one is on the Financial Industry API Register. This is something that MES built with the aim to serve as the initial landing site for open APIs available in the Singapore financial industry. The register is updated on an ongoing basis as our FIs make available their open APIs. So we have classified the open APIs into 4 main functional categories. As you see on the screen, product APIs, sales and marketing APIs, servicing APIs, and transaction APIs. And since we started tracking this in 2017, the number of open APIs actually have grown gradually in the initial years and started to accelerate in 2020, as you can see on the screen. This shows that FIs have over time understand the need and benefits of having open APIs to stay relevant and competitive in the digital economy. The next project is API Exchange, in short, APIX. So this is really a global open architecture platform that supports financial innovation and inclusion in ASEAN and around the world. Right? So APIX has evolved quite a fair bit since it was launched in 2018, but primarily it offers 3 key value propositions to enhance collaboration between FIs and fintech firms. Well, first, discover, right? It allows FIs and fintech firms to discover and connect with one another more easily and more cost effectively on the global marketplace. The platforms can also support hackathons to solve industry and business challenges. The second point is on dry run. Basically, FIs and fintech firms can design experiments to validate digital solutions in different scenarios using APIs in the APIC sandbox. This will facilitate FIs' adoptions of APIs and enable them to rapidly deploy new solutions to underserved markets. And finally, decide. Right, this is really a feature that allows FIs to further ascertain the fintech firm's reliability and capacity. And this is done by allowing them to obtain verified credentials of the fintech firms based on golden source information stored on the blockchain.
Sorry, Ken, I'm probably going to have to cut you off. That's 5 minutes. It goes really quickly, but we will have time for questions in a second. So if I can just ask our final speaker, Miss Emily Martin, the Assistant Secretary, Policy and Engagement Branch of the Australian Treasury, to step forward and present for 5 minutes. Ken, you might have to stop sharing your screen.
Okay. How's that? Yep, great. Hi. Good morning, good afternoon, good evening, everyone. I'm going to try and meet the KPI of less than 5 minutes. I probably different to the previous two people on the panel. I'm just going to talk about the progress that we've made in Australia over the last 12 months or so, and then give a brief update on what we're working on now. So probably more fitting in with the evolving landscape description that Jamie had earlier. So in Australia, of course, we have the consumer data right. And from the outset, it was designed to apply across the Australian economy, starting in the banking sector. So here we have our open banking working, where consumers can choose to securely and conveniently share their banking data with accredited and trusted recipients to access better value products and services tailored to their individual circumstances. So implementation of CDR by the 4 major banks is now complete, and implementation by non-major banks also progressed over the last 12 months, and all banking products have now been phased in for the non-major banks. And the rollout of the CDR for the banking sector will be complete in November of this year, when non-major banks will also be required to support joint accounts, business consumers, partnerships, and secondary users. Another significant development has been new rules to support both increased participation in the CDR by businesses and empower consumers to share their data easily and securely. And we made these rules late last year. They introduced new pathways for industry participation by allowing accredited CDR participants to sponsor other parties to become accredited or to operate as their representative. They also enable consumers to share their data with certain trusted professional advisors, including accountants and financial advisors. And they also allow disclosure of limited data insights to any person should consumers choose to do so. So in terms of going across the economy, consumer data sharing in the energy sector in Australia will commence from November this year, starting with the biggest 3 energy retailers. And it's hoped that bringing energy-related consumer and product information into the CDR will help households make better comparisons on their energy plans and access better deals. Also, earlier this year, the communication sector was designated as the next CDR sector, and we're currently engaged with stakeholders on draft telecommunication-specific rules and standards. In terms of the next steps for CDR, we have, of course, we have a new government in Australia, and we have a new minister responsible for the consumer data right. We've had very good engagement from the Assistant Treasurer, Stephen Jones, who is keen to see the momentum in CDR maintained. And while we're still settling some key decisions, I can talk broadly about our work ahead. As I said earlier, the CDR is a framework that has been designed to apply across the economy. So to inform the next stages of expansion of the CDR, we conducted a strategic assessment last year, and the assessment identified open finance as the next priority area for expansion of the CDR, which includes service providers in non-bank lending, merchant acquiring services, general insurance, and superannuation. The strategic assessment also highlighted that expanding the CDR to government data sets and government recipients has the potential to improve public and private sector services, as well as enhancing the user experience and utility of the scheme. As the first stage of open finance, Treasury consulted with stakeholders on non-bank lending as a CDR sector in March this year. We've also been considering how to take forward recommendations of the inquiry into future directions for the consumer data right, and key recommendations included action and payment initiation reforms, which would enable a firm to send instructions on behalf of the consumer to another firm to perform actions, effectively expanding the opportunities of the CDR and delivering more services for consumers. And just finally, because we like keeping very busy, we've also supported an independent statutory review of the CDR, which has been looking into our statutory framework. And we've had a lot of stakeholder engagement, and we expect to deliver a report to government on that soon. So just to summarise, on the horizon for us is continued expansion across the economy, with energy implementation coming up, then telecommunications, and moving into the subsectors that make up open finance, starting with non-bank lending. We also expect to make good progress on enabling action initiation within the CDR framework. For some, this is better known as right access, and we expect to start with payment initiation. And then we finally expect to have work that will follow on from the statutory review into CDR.
Emily, I'm going to have to call time there. Thank you very much.
That's done.
Absolutely. Now, can I ask Ken and Mr. Noviento to join us back on screen? I have put a message out if anybody had any questions, but I guess I'll start. So, Mr. Noviento, Ken, Emily, 3 different countries, 3 very unique financial services systems and government models. Why is nobody actually approaching open data in the same way as anyone else? There doesn't feel like there's any 2 countries in the world that are actually looking at this from the same direction. So I'm curious to get your thoughts, the 3 of you, as to why this may be the case. Who wants to lead it off? Mr. Noviento?
Okay. Thank you, Jamie. That is a very interesting question. So let me explain why we chose our path. Yeah. We all know that in the digitalization area, we need one important prerequisite, the digital ID. That is the one thing that we are lacking in Indonesia. So that's why we chose our path, not doing the same way with the other, like Australia, you have CDR, and maybe other countries. We chose our path by doing the standardization first, and by doing that, we try to overcome the necessities of digital ID through building the interconnectivity first, and then we can deal with other areas later on. Probably that will be the something that I can come up with for explanation. Thank you, Jamie.
No, look, I think that is a wonderful, wonderful insight. In fact, digital identity is something that's been hotly pursued in Australia for a number of years. But Ken, Singapore has had a level of functional identity or digital identity over recent years. How important was digital identity in the path that you chose going forward for Singapore?
Yeah, sure. Thanks. So just to explain a bit of our context, our approach has always been not allowing regulations, or rather, we don't allow regulations to front-run innovation. So we let markets to flourish first and only intervene where we see regulations could help, right? Whether to address certain risks or to pull industry together in the direction we think is good. So that is the approach we take for open finance, open banking, or open APIs, as whatever you call it. And we have started that since 5 years ago. We are seeing certain early results of success, where some of the projects I've shared earlier on, whether that is through APIX or the SG Fintech platform, which pulls industries together to open up APIs to facilitate data exchanges within the financial industry. That being said, that doesn't rule us out from taking the regulations approach. That's something that we are still studying. But at this point in time, I think a market-driven approach has worked well for us. And to your questions on digital identity, we are fortunate because we do have a national digital identity in place. And quite a fair bit of our such initiative, we leverage on what we have, which is the digital identity to identify, to authenticate the customers itself. Yeah.
Wonderful. And now, Emily,
Thank
you
you.
know I'm going to drag you into this conversation as well, especially with cross-sectoral applications. For instance, banking in Australia, you have a customer ID, but in electricity, your account's often tied to a physical premises and a meter box. So the role of digital identity is expected to become increasingly important in the Australian cross-sectoral capacity. Emily, is there any thought to how quickly we think digital identity will start to affect the rollout of the consumer data right?
I think that in the Australian context, digital identity is going to become, as you say, even more important as we attempt to draw data from different sectors across the economy. And then even so, probably more relevant when we move into deepening functionality in the CDR by enabling action initiation. As I mentioned in my comments, we do have a new government, so we are in the process of, and some of those functions have moved across government into different agencies. So we are in the process of bringing that all back together. But it's really important that our digital economy, that the parts of that are joined up, and yet digital identity is important in the Australian context, and we'll certainly be working with our colleagues on its progress.
Wonderful, thank you. Now back to Mr. Novianto. You made mention of starting with standardization of APIs, and I've personally been watching the API playbook being put together over the last couple of years. How have you seen the market accept, I guess, the playbook? Are you seeing innovation being shared from brand to brand? Has there been any sort of industry-wide collaboration? Do you have any examples that you can share?
Yeah, as I mentioned, Jamie, the standard itself is the product of collaboration between us as a regulator and a representative of industry. So from them, for them, led by us. So that is our approach. Yeah. And then, as I explained earlier, there are some opportunities can be derived from the standard, not only for payment service. As you may know that the standard is specifically for payment processing, but there are possibilities for using the API for other business. Like as I said, you can create business like credit scoring by using the API. There's so many opportunities. It's like a Lego brick that you can create so many opportunities. This is the one thing that we can communicate for the industry. If you're not doing the standardization implementation in the early stage, you will be left behind because others are doing it as they thought to. According to the stages. So this is very important message that we deliver to this. This is an opportunity for you to create more business, to be more interoperable, to be an integrated ecosystem, at least in the domestic side. Thank you, Jamie.
Thank you very much. And Ken, I'd like to get your thoughts. Often we're criticized when you standardize things, people are afraid that they lose their competitive advantage or it stifles innovation. Is that what you're seeing in Singapore, or has this standardization actually created, I guess, greater opportunity for the market?
Yeah, so I think we don't take the standardization route for APIs or open finance. We take a market-driven approach, but I think we focuses more on the foundational infrastructure, right? Things like, for example, the digital ID, things like the national payment rails. These are enablers which we can standardize, and it can help the entire ecosystem to flourish. But beyond those, even though we have an API playbook, it is playbook in the sense of the best practices. We don't really mandate the FIs to use them because we kind of understand that each FIs have their own maturity cycle, right? So some may be at an early stage, some might be more advanced than what we are talking about. So we let that space to be more open, and that in a way, I think it brings a good balance between mandating certain parts of the infrastructures and at the same time maintaining certain parts where innovations can still thrive. Yeah.
Wonderful. Thank you very much, Ken. And Emily, I don't mean to keep putting you under the pump, but you know, as the third speaker, it's given me a lot of information. So Australia has taken a very different approach. Australia has been often criticised as being extremely prescriptive in all elements of the consumer data right, from standards to the rules, to the accreditation. Why do you think Australia chose this approach when there were other pockets of excellence around the world? What made Australia unique?
I mean, I think partly, Jamie, it is that we are a country that does impose regulation on a lot of different, you know, I wouldn't say impose. We do have regulation, a regulatory led kind of model across a lot of different sectors. I mean, we had the advantage of looking at what, you know, the framework in the UK, and of course we have a really similar kind of financial system to that in the UK as well. So we had the advantage of looking at that model, and then a lot of, you know, really insightful and great reports about how data sharing and data portability should work in Australia. Partly the prescriptive nature of the CDR in Australia is due to the very high consumer protections that we have in the system, and those are really important in Australia. That's what we hear from consumers, that they want those strict privacy safeguards and security in our system. So that is a lot of the prescriptive, regulation that accredited data recipients in Australia need to comply with. But then, you know, we do have this regulatory framework, and whilst it might seem prescriptive, it is a framework that can work across the economy. So we have the one legislative framework, statutory framework. It's quite high level and clear. Then we move down to the rules, and as we move into new sectors, we, you know, seek to keep the rules the same and only make sector specific rules where we need to. And where those rules are needed for the operation of CDR in that sector. And then, of course, we have the standards, but we comply with, we have, you know, the highest kind of security and privacy safeguards in our system. And that's what Australians expect from data sharing.
Yeah, look, thanks, Emily. Sorry to make it seem like I already know the answer to all these things, but for the sake of the audience. So, Mr. Noviento, Emily raises a great point. Australia has been so specific about so many different elements, and part of the reasoning is that the end consumer, the end customer, will be more likely to utilise these services if they trust them, if they have confidence in their safety. What are the early adoption in Indonesia showing you as far as consumer trust? Is this going to be an issue as this system rolls out further across the country?
Yeah, that is very important question to address. Yeah, but as I mentioned, we just finished the rollout process in last June, just a few days ago. So we cannot really see the impact of the standardization first, but we believe that, as I mentioned, that this is the standardized for payment purposes. Of course, we will expect the impact will be some efficiencies and some opportunities of new businesses in the payment area. And then we can expect expansion of the use of API in the other direction for doing better in supporting the inclusion, whereas inclusion is still a big homework for us. Thank you, Emily. Jamie.
So we'll come back and see you in 12 months' time, Mr. Noviento, and see how the rollout's going. Ken, I'm going to ask you the same question. Now Singapore is renowned for people trusting of government and industry. How do you think your approach is actually assisting the consumer, the end customer, to feel safe in employing these new innovative, regimes?
Yeah, thanks for the question. So I suppose in terms of the trust and in the financial institutions, we have the various regulatory frameworks in place for those entities that we regulate and those entities that license them. I think the bigger challenge comes in when financial services are being offered through non-financial services company, right? In short, what is commonly known as embedded finance. And that's where potentially a consumer can consume financial services through unregulated entities. I think that's where the complexity and the challenges arises. And who do you trust? Do you trust the financial institutions? Do you trust the non-financial service company? What is the arrangement between these two sectors? And this is where I think we introduced the data sharing handbook sometime last year to kind of pin down certain best practices where financial institutions engage in such partnerships with non-financial services companies. And I think
models, like modeling framework.
Sorry, Veronica, can you turn your, yep, thank you.
Yeah.
Keep
So
going.
I think that is one step in terms of providing guidance in terms of data sharing best practices. Of course, I think we are also currently working on some other initiative to see how we can level up or kind of, in a way, maintain a level of trust when customers engage financial services through non-financial services companies. Yeah.
Thanks very much, Ken. That's a fantastic point. Look, guys, just in wrapping up this panel, I've really enjoyed learning about 3 different approaches, 3 different countries. I think it's going to take another 12 months. I'd love to revisit this in 12 months when we've started to see more of an uptake from a consumer and see what are the learnings and has anybody refined or made changes to their approach. But can I ask everybody to join me in thanking Mr. Novianto, Mr. Chua, and Ms. Martin, please? Thank you very much.